An index tracker fund, also known as an index fund, is a type of investment fund that aims to replicate the performance of a specific stock market index, such as the S&P 500 or the FTSE 100. It does this by holding a portfolio of securities that are similar to those that make up the index, in the same proportion. This means that the fund will perform similarly to the index it tracks, minus any fees or expenses that the fund may charge. The concept of index tracking was first introduced by John Bogle in the 1970s, when he founded Vanguard and created the first index fund. The idea behind the index fund was to provide investors with a low-cost way to gain exposure to the broad stock market, without the need for expensive active management. One of the primary benefits of an index tracker fund is its low cost. Because the fund is not actively managed, it does not require a team of analysts and portfolio managers to select and trade individual stocks. This means that the fund can be operated at a lower cost than an actively managed fund, which must pay for these services. As a result, the fees charged by index tracker funds are typically much lower than those charged by active funds. Another benefit of index tracker funds is their simplicity. The fund's objective is to match the performance of a specific index, which means that investors don't need to worry about whether the fund manager is making the right investment decisions. They simply need to decide which index they want to track, and then invest in the corresponding fund. Index tracker funds are also highly transparent. Because they are designed to replicate the performance of a specific index, investors can easily see what securities the fund holds, and how those securities are performing relative to the index. This level of transparency can be reassuring to investors, who may be wary of the opaque nature of some active funds. Finally, index tracker funds offer investors the opportunity to diversify their portfolio. By investing in a fund that tracks a broad market index, investors can gain exposure to a wide range of companies and industries, without having to research and select individual stocks. This can help to reduce the risk of their portfolio, as it is less exposed to the performance of any one company or industry. In conclusion, an index tracker fund is a type of investment fund that aims to replicate the performance of a specific stock market index. It offers investors a low-cost, simple, and transparent way to gain exposure to the broad market, while also providing diversification benefits. As such, it has become an increasingly popular investment choice for both individual and institutional investors. Thanks for watching.